Exactly. Hello, everybody. We were asked to have kind of like a fun conversation outside sort of the main event. So given the loungy environment and the truffles, which we hear are amazing, grab one and join us for a conversation. Look, I think we'd love this to be interactive to the extent folks want to chat about compliance and illicit finance and some of the stuff that Alma and I think about all the time. I think what's so interesting is that we are all here because we believe deeply in the promise of this technology, this idea of cross-border value transfer at scale at the speed of the internet. But you know who else loves cross-border value transfer at scale at the speed of the internet? Bad guys, right? So what we need to build and what we're building at TRM Labs and what Guidehouse helps clients to advise clients on is how do we build compliance to stop bad actors abuse this new financial system that we are all so dedicated to building. So without further ado, I am super honored to be joined by my close friend and super subject matter expert in this space, Alma Angotti from Guidehouse. Alma, maybe talk a little bit about how you work with clients to build just that. Like, how do we stop bad actors from taking advantage of this technology, from taking advantage of these platforms?
So, it's funny because Val Jabbar, who's the head of financial crime at Coinbase, was at a conference and somebody asked her, what does your compliance program look like? And she was very frustrated and she said, it looks just like yours. So it is going to look just like a lot like a traditional financial institution. They're going to have to know who their customers are when they onboard, assuming it's not DeFi or some other kind of platform. They're going to have transaction monitoring. They're going to have their due diligence for higher risk customers. So it manifests differently, but it looks a lot the same. And while there are special risks, as we don't have to tell this crowd, of pseudo-anonymity and transfers that are fast and cross-border, there are lots of mitigants. And the value of technology is there are often technology solutions to the compliance issues.
Yeah, no, thank you very much. And in terms of those challenges, I'll kind of throw out a few that we're thinking about. But look, I think that fraud and scams are continuously an issue in the crypto space, but really just sort of, also true in the traditional space. We saw about 9.4 billion in scams last year that were crypto related as an issue. But as a former national security prosecutor, those are kind of the issues I think about all the time. How do we mitigate the risk of DPRK hacks on DeFi protocols or bridges? How should we think? What is the right context to talk about terror financing in this space? Sort of the ransomware, the big issues. How, when you're talking to clients, like how are, particularly like we've talked a lot lately about working with DeFi clients. How are you thinking about those issues when it comes to the more decentralized space?
So, yeah, with more decentralized spaces, it's kind of a challenge, and it's always a good thing when they decide to think about it themselves before somebody makes them think about it. And you have to look at where, essentially you have to do a risk assessment. What part of their platform exposes them to illicit finance risk or sanctions risk, and what kind of controls can you put on to stop that? I mean, it's very simple stuff. So one of the clients that we're working with is they're going to be largely domestic to start or solely US based. That helps. No VPNs, IP address blocks as a starter. So the point is, the advantage of the Bank Secrecy Act and AML obligations is you can tailor it to the risk of your business. You don't have to waste a lot of resources on stuff that isn't going to affect you. So the first step is going to be figure out where those risks, where the hacks can come, where the control points need to be. And then you have a reasonable basis for saying we did our best.
Terrific, yeah. I have my own views on this, but I would love to get your take. I think Jen and Katie want to make sure we stay on point. So
yes.
CBDC.
Oh, yes.
how does sort of CBDC add to this conversation, or does it at all yet today? Like, how should we be thinking about what compliance, risk management, illicit finance mitigation looks like in a world where there are CBDCs alongside stablecoins, cryptocurrencies, and other digital assets?
Well, that's a really good point, because one of the main mitigants of other digital assets, which is that you've got a public blockchain that's completely traceable, which can give you, as TRM Labs does, a lot of information about the risk of the client, the risk of the tokens at issue. You don't want that in a CBDC. So how can we protect the financial system and still allow the anonymity that cash allows in a situation where you don't have the bulkiness of cash? And so some of the things that we've been thinking about with some of our central bank clients are some of the controls that you see with, say, prepaid access or stored value. Limits on how many wallets you can have, limits on the reloading amounts, things like that. There's also, just conceptually, can you program in some way to freeze further transfers of a CBDC with appropriate service of process? Just like when at the SEC, I could get a court order to freeze an account at a bank or a broker-dealer. So is there something like that if you see your CBDC in a terrorist wallet or a North Korean hacking wallet, can you freeze it so they can't use it, essentially? So those are, again, with the appropriate process, because you're not going to want it to be fully traceable the way that we do for digital assets. And how are you guys thinking about this as a analytics company?
Yeah, I mean, I think it's this sort of classic question of security versus privacy, which we dealt with, post 9/11 in airports and city streets, and now we're talking about it on blockchains and what it ultimately means. I think the reality is we're going to have to figure out a way to thread the needle. And kind of, I loved your answer because it went to, there are technology solutions to this. I think for better or worse, we're still building those, and I know regulators don't always love to hear that. But the reality is that, Michael Mosier, I thought, did a great job today on the panel where he talked about privacy. He's sort of my patron saint on this topic. But it's like, hey, look, there are things that technology can solve this, whether it's digital ID, which I think is going to be a really big piece of the puzzle ultimately, right? Zero knowledge proofs. There's other ways, I think, where we can enable privacy in a more and more open financial system. And from a CBDC perspective, like, should we be baking that in? Should people be, should ID be part of the way people are transacting with CBDCs, stablecoins? So I think this is all sort of a little bit TBD. And I know regulators don't love that answer, but I think that there are folks who are building that today. It's going to be a really important part of the ecosystem. I think for now, what we're doing is compliance in crypto, and that is what we do at TRM, where we are screening wallet addresses, we're monitoring transactions, we're tracing, we're identifying wallets that are associated with illicit activity. But this idea of sort of, baking it into the protocol layer, into the transactions, is not something that's sort of happening today at scale.
And look, there'll be, a lot of this will be decided by what the design choice is of the CBDC. Are they going to require it to be done through banks and other financial institutions? So you'll have an account just like you do now. That would take away maybe from some of the financial inclusion benefits of a CBDC. Is it going to be wholesale? So then it doesn't matter so much, right? Because you've got the regulated financial institutions who are already trained and ready to look at things like this and do a better job. Is it going to be registered or semi-registered? All of that will have an impact on what controls that they need.
Awesome. Yeah, a couple quick plugs, because I see Kim Donovan out here. She is moderating a panel tomorrow that I'm excited to be on sort of a deeper dive into a lot of this, illicit finance, how we're thinking about things like terror financing, DPRK, ransomware, in the sanctions, in the sort of crypto, stablecoin, CBDC ecosystem. So super excited for that. And then also, would love to continue the conversation. The TRM booth is over here next to Guidehouse. We can kind of keep this going. Any questions or sort of comments overall around compliance in this space, illicit activity?
Anybody else have
Kinda
any
open it
brilliant
up
ideas?
in this
Any good
loungy
ideas?
environment.
Yeah.
You have Alma here.
We needed
I mean, you got to take advantage of that.
We
Cocktails.
needed cocktails
Yeah.
to get people to talk. Oh, yes.
I knew a super sharp Dookie would have a question. I love that. All right. Yeah.
Question about how atomicity starts to change how you think about security and privacy. If the instantaneous nature affects maybe how you're approaching security, right? I think the ability right now to have a little bit of a lag on transactions and settlements allows for more diligence to be done in that window. Atomicity obviously eliminates that. Any thoughts on that?
Yeah, I'm happy to. I think it's a huge issue right now, and a really, really smart question. It's something that is top of mind all the time. I think the challenge, and this is like, happy to continue this conversation because this is like a really deep point.
It's a long one.
It's a really important question. I'd say that is the difference between truly decentralized finance and kind of what we're regulating for today, and that is centralized exchanges. Essentially, these centralized exchanges, like the Binances and the Coinbases of the world, have compliance teams in place, right? They have teams to look at these things, to do manual sort of looks at different transactions. Much of what's happening today in the DeFi space is automated. It is definitely the sort of latency issue is definitely a challenge and something we're thinking a lot about.
So not a good answer, but the only one we have right now, right?
Yeah, no, absolutely, and Alma, feel free to jump in here. It's a great question, Eli. I think that the way I see this, and I think this is again this is a work in progress. So I think a lot of people are sort of looking at this differently. I think right now what we're doing in compliance in crypto is sort of a block list model, and very much. I mean, at TRM we're building the biggest block list of data of cryptocurrency addresses. It's terrorist financing, you block it. If it's DPRK related, etc. I think what we're moving towards, and this is not self-serving because we're not building this today, is a whitelist model that doesn't necessarily hold your PII or any sort of thing as part of your identity on chain, but from whether you're using zero knowledge proof or some other technology, you're knowing that you know if you're Coinbase when you're transacting with that address, or a DeFi protocol, Uniswap, or anyone else, that you're dealing with a good actor, or at least an actor that is not associated with any type of illicit activity. I think that's the model I see today. I'm sure there are lots of other sort of technologists building different things, but I think that's sort of what I envision, where you're not really necessarily putting your ID out there. You're just putting the fact that the sort of zero knowledge proof concept, right? It's a yes or no answer.
And depending on the security, right, of the store of that, like I got a security clearance once a long time ago, and that database was hacked, right? So, it happens now probably much easier because it does. And so we'd have to make sure it wasn't a worse problem, and hopefully we could make it less of a problem. But part of the answer is, too, you can't get rid of all risk, and you're trying to balance efficiency, effectiveness, inclusion, cost, and mitigating the risks the best you can, and hope that you come out for the better. And as Ari said, it's a work in progress. That's the goal. Whether we'll get there or not, it's hard to say right now.
Maybe one more. All right. Ooh. Dan. Travel rule?
Look, the travel
sorry,
rule.
the travel rule. Are there any good solutions out there, and are you building one?
There are a lot of solutions people are using. How good they are, I think, is a matter of debate. It's kind of like what somebody was saying on the panels today. This whole system was designed to evade things or not to comply with things like the travel rule. So it's really hard to graft that on. So I'm not seeing anything that people love, Dan, to be honest with you.
This is like the what happens in Leesburg stays in Leesburg kind of moment.
Yeah.
We're not building one, and quite frankly, part of that is, our view that this thing is changing so rapidly. What the expectations are, we're even seeing, additional conversations come out of, standard setters around what is expected, and I don't know that we've reached the end state of what a travel rule will look like in crypto today. I think we will get there, and there will be solutions. I do think there's a ton of great there's a ton of good companies today that are doing this stuff, but I don't know that we've reached sort of the Nota Bene is one that comes to mind very quickly. We partner with them on Travel Rule, a number of other companies, but I don't think we've reached the end state of what what is going to be required as part of the Travel Rule.
Okay.
All right, party people. Well, thank you.
Thanks for
Thanks for coming to hang out with us for a little bit, and looking forward to a lot more fun.